What comes to mind when you think about Warren Buffett? Do you find it strange that he made so many errors in his early professional years? He made errors when he believed that forecasting stock values was the best course of action. He made errors by assuming that part of being a stock trader was keeping an eye on the charts and performing technical analysis. After a number of years, he understood that his strategies were ineffective. He then changed and adapted. How did he act? By concentrating on the firms themselves, he began investing in publicly traded corporations. He invested in a business and stopped stressing about whether its stock would increase or decrease over the course of the following day, week, month, or year. He didn't care what the stock price did because he didn't know what it would do. He was conversant with the corporate sector, even if he had no idea how the stock market would fare. Warren Buffett was skilled at identifying a solid company. His entire life has been committed to this one goal. The good news is that he didn't need to be brilliant to accomplish this, because he surrounded himself with individuals who shared his values and encouraged his best qualities. He came to the conclusion that intelligence was not necessary. It would do him no good. He can even make matters worse by overanalyzing and overthinking the situation. You don't need a highly developed intelligence to survive. What precisely do you need then? Your mental frame of reference must change. The majority of investors approach equities with the incorrect mindset. They believe that stock prices will increase over the next few weeks. If they decline, they will be disappointed. As a result, Warren Buffett can purchase additional items at a profit. He has a much wider perspective. He speculates on the potential value of the company in 10 or 20 years. Because he believed in his business, he initially put all of his money into it. Stocks, in his opinion, are a good depiction of American business. At least 80% of his fortune has been allocated to American businesses. He doesn't want to add to his things, but he does want to give his loved ones a decent place to live. However, he doesn't care if he has 5 houses because he'll be happy with only one. Having more than one property doesn't make him happier, because there are typically more issues with numerous properties than there are with one. Although Warren Buffett inspires awe in the financial world, he is only a man, and not a particularly complex one at that. When he is investing, there are 2 things that genuinely bring him joy. 1, he has always been aware that his investments increase over time. His argument is that this investment game, as he refers to it, becomes tremendously easy if you've learnt your lessons about what to buy beforehand. He is investing in genuine components of American companies rather than stocks. Even better, he enjoys decreasing stock prices since they allow him to buy additional shares. Second, he appreciates working with a group of reliable colleagues. Even though he might earn more money working alone, he prefers to collaborate with others, individuals who have confidence in me. Dig into the businesses. Have you ever considered what would occur if someone focused all of their time and effort on their business instead of trying to enhance their fortune by trading stocks? Okay, let's suppose there isn't a stock market. Private acquisitions like buying a home or apartment are still regarded as investments. You may now be thinking, how can I spend my savings the best? What are your plans for the money? To save it or invest it? Where, if so? People would be considerably better off in terms of buying firms if there were no stock market. They would focus entirely on the management of the firms rather than being distracted by the daily changes in the stock market. Making the business one's main priority will allow one to avoid getting distracted by the fluctuating state of the stock market. Why buy into American companies? More Americans than at any other point in the nation's history are rich or have greater salaries. Home buyers can now get mortgages at historically low interest rates for the first time in history. These days, even the lowest 5% of the population are better off than the wealthy were, say, 50 years ago. In recent years, access to better healthcare, education, entertainment, and transportation has increased for everyone. So why would one invest in American companies? In the United States, there has always been a safe and welcoming market for foreign investment. Because of its stable and open legal system, low taxes, outstanding infrastructure, and access to the most lucrative consumer market in the world, the United States is a great place to do business. International investors may also decide to diversify their risk by making investments in the US. This is especially true if there is little or no correlation between the returns of the American financial markets and those of the investor's native country. Capitalism and modernization. Modernization has improved numerous facets of society. from the most little to the most essential. The latter is exemplified by the contemporary trading market, where the United States is currently one of the world's most significant economic centers. It is hard to believe that this country has only been around for around 200 years. Yet in terms of economic development, it has grown enormously, and it will only continue to grow stronger in the future. Unsurprisingly, the United States has had the biggest growth, as was previously mentioned. The United States has advanced more than any other country. The population of the United States of America was less than 1% of the population of the world 3 generations ago. The work ethic of immigrants was no different from that of the rest of the world, and they didn't arrive with suitcases packed with gold. They all put in the same number of hours and are about of the same IQ. They may have had a little advantage in terms of initiative and international travel, but as of now, America is in charge of 20% or more of global wealth. It's unlikely that anyone in the late 1700s government would have taken you seriously if you had told them that in 3 generations, their great-great-grandchildren would be flying airplanes. With the help of their cell phones, they will be able to amuse themselves, receive all the necessary medical care, and have access to cars for everyone. You would probably wind up in a psychiatric hospital. An hour of effort didn't buy you nearly as much as it does now if you look back a century. American companies have demonstrated their worth, and they will do so going forward. According to Warren Buffett, the best long-term investment plan is to purchase an index fund. The Standard & Poor's 500 index serves as the benchmark. It's an index that tracks the stock prices of 500 significant American companies that trade on American markets. He advised investing in the S&P 500 index, which monitors the performance of the 500 largest publicly traded firms in the US. But you don't have to be an expert to do it. This is most likely the simplest and, in the long run, maybe the greatest approach to invest in American companies. So, what do you think? Is it your intention to fully follow Warren Buffett's advice, or to make a few minor changes without departing from the core idea?